Recording should start any second.
There we go.
Let everyone know they're being recorded. You're being recorded. Fantastic. Right, so welcome to the meetup this week. We've got the fantastic Kirsty Young here, who's going to come and tell us, educate us on insurance, which every one of us should have. So as usual, sponsored by Resourcefully, we're helping IT contractors in their careers and helping them with things like insurance and accountancy and training, etc., etc. And we're also enabling organizations to contact you directly and hire you for the skills that you've got. So we're really trying to push that message out there. We've got some customers starting to work with us, which is fantastic. But if you could spread the word, that would be much appreciated, and get more contractors on the database as well. But there's hopefully some exciting times ahead. We are recording. Rebecca will help MC this. I think we do questions in the chat, and then we'll try and pull them out at a logical point. I think that's it from me. I shall hand over to Kirsty just to say hello and do an intro and tell us about insurance, because we know nothing.
It's brilliant. Okay, well, thank you for those of you that have signed on. For the next 20 minutes, hopefully 20-ish minutes, I will take you down the rabbit hole of technology liability insurance, what it is, why you need it, what to look out for when you're in the market to buy an insurance policy, agency arranged insurance programs and what to look out for those, because beneath the surface they're not always what they appear to be. And then the four main pillars of a contract when you are sitting down at your recruitment agency or on your client site, and what to look for in those contracts to help you navigate and figure out the best policy for you and the services that you are about to provide.
So Kirsty is a insurance broker. That means she represents you and finds the policy that best suits you. So she works with lots of different insurance companies, which is somewhat different than obviously going direct to an insurance company. And the joy of brokers, and this is me speaking from personal experience, is they're really up to the minute on all of the changes that happen month to month. And so this is a genuine personal example. When I had a situation where the policy asked a specific question that I did not want to answer, they went and found a different policy that did not ask that question. This is very handy. It doesn't always necessarily mean you have to pay more either. So the benefits of working with a broker like Kirsty are fantastic. Now, let's kick off. So technology liability is one type of insurance, isn't it, Kirsty? What is it, and why is it that IT contractors need it?
Okay, so technology liability insurance is actually a two-pronged policy. They combine a professional indemnity policy and a public liability policy into one, specifically for IT contractors and the provision of technology products and technology services. So when we talk about professional indemnity, we have to be mindful that it's also called errors and omissions insurance, and it's also called professional liability insurance. The insuring clause of a professional indemnity policy is that this particular policy is going to indemnify a third party for any direct financial loss that they have suffered as a result of any wrongful acts, errors, or omissions. So think professional mistakes or a substandard service that you have provided in your promise to them on certain deliverables. So the issue that you have with a professional indemnity policy versus a public liability policy is professional indemnity is negligent mistakes, public liability is property damage and bodily injury. So going back to the professional indemnity part of the claim or the part of the policy, it's what they call claims made. So in the event that you have done something wrong and your client decides to sue you or challenge you for doing something wrong, so it's an allegation or an accusation, the date that you receive that letter becomes the date to which the policy that you have in the time responds. So when we talk about a claims made policy, it's the date the claim was made becomes the policy that responds on that date. So you have to be really careful on a professional indemnity policy when you start playing around with your limits of indemnity, because if you keep adjusting them up or down, it could have negative implications on you in the event of a claim notification. Claims examples, you're looking at things like coding errors, system designs that aren't fit for purpose. You're looking at projects that have been managed but not to deadline, they go over. You could have breach of contract related claims. You can even have claims of, being accused of copying somebody else's content. Now, the brutal truth is that in the 23 years I've been working in specific technology liability insurance, never once had a PI claim. Oh. But it's the allegation and the legal costs and expenses, which I'll talk about later, that are the most valuable parts of this policy. On the flip side, sorry, Rebecca.
Keep going, sorry.
On the flip side, you have the public liability, which, as I said before, is property damage or bodily injury. It also has a few other aliases. It can be called general liability. It can be called broad form liability. It can even be called bodily injury and property damage insurance. The purpose of that is to cover exactly what it says, liability to the public. But you still have to be negligent in the provision of your services to cause the liability to the public. And the liability of the public is limited to property damage or bodily injury. Now, when you hear all the marketing on the radio, you hear them, the public liability claims of coffee on computers or, cabling lying around. Again, in the 23 odd years that I've been doing this, I haven't had a tech contractor. I've had tech companies, but I haven't had a tech contractor use the public liability policy for those claims. The one claim I have had as an IT contractor that was affected by their public liability insurance was an IT contractor who was engaged in a financial institution, decided, with a whole bunch of the others within the team, closer to Christmas to play a game of cricket inside the office. It was the IT contractor that struck the ball, that hit the glass break, that set the fire alarm off in a 7-story building. That's the only claim that was paid under a public liability policy in the last 23 years that I know.
We've got a question from Tim. How do I know how much would be enough for coverage when purchasing a professional indemnity liability?
Okay, well, I'm going to talk about that and what to look for.
Let's do that later then.
We'll cover that off. We'll talk about why you need it.
Yeah, let's go on to, so why we need insurance.
Aside from the indoor cricket matches, you're contracted to require it. When you enter an agency-related contract or a direct client-related contract, gone are the days where we just go, she'll be right. It's going to be okay. I can just not worry about a thing. We're in a really litigious society at the moment. So people are wanting compensation for mistakes that have been made. You, as an IT contractor, are being hired for your professional expertise. You are filling a gap that no one else knows how to fill for a client that needs what you have. You are charging them for that privilege. You almost have a performance guarantee to do what it is that you're promising to do. And when it all goes belly up, they're going to look for financial compensation for you. It would be no different to me engaging a plumber to come and fix my pipes and floods my house. It would be no different to me engaging an accountant who doesn't file my tax returns on time. Same principle applies. I'm paying them because I don't know how to do it. And if they do it wrong and it causes me financial loss, I am entitled to seek compensation for it. Now, for me, when you say, why do I need it? I personally think the most valuable part of the policy is not the professional indemnity and it's not the public liability. It's the legal costs and expenses cover that comes with it, because the triggers of these policies are allegations of negligence. And as soon as an allegation is made against you, your legal costs and expenses clock will start ticking. And your indemnity policy covers legal costs and expenses up to the limit of indemnity. So for example, if you have $1 million in a limit of indemnity, you have $1 million in legal costs and defense. I'm good at my job, and I'm sure you are all too, but I don't have $1 million sitting in my bank account ready to exhaust on trying to defend a claim while still trying to maintain my business and hold on to my clients and my reputation. The indemnity policies, this tech liability policy, takes away your time, your cost, and your energy that you will have to forfeit in order to defend yourself in an allegation that in most cases may not ever surmount to anything, but the legal costs and expenses will be enough to break the bank.
Yeah, that is so important. And we do know lawyers charge like wounded bulls. Now,
Yes.
a technology liability policy has 4 main elements. Can you talk us through them?
Yeah, you're talking about predominantly when you're buying the technology liability policy, you want to look out for these 4 things: cost, what reinstatements are, what the excesses are, and what the jurisdiction is. So let's touch on cost. Gone are the days that a technology liability policy would be costing you around about $1,500 to maybe $2,500 plus GST. They're gone. I'm not saying they're extinct, because there are some insurance brokers out there that are still providing those types of policies. But I can tell you categorically, you can get $1 million policy with a $2 million aggregated limit for $335 plus GST a year. I don't need to pay $1,500 for the privilege. Cost does not equal quality, okay? And the reason why you have a $1,500 policy and a $335 policy is simply because of the bulk buying power and the leveraging of policy terms and conditions that certain brokers have when they are looking after a pool of IT contractors. Because if you go to one broker with your application for insurance, they are then marketing your risk as one unit. I have one contractor that needs insurance. They can go to 5 or 6 technology liability underwriters in the market, and they'll all come back with variable premiums. You can then go to another broker who has a scheme of 500, 600 IT contractors with one particular provider and leverage adding you as another one to that pool to obtain policy terms and conditions and in most cases premium far better than what you would on a standalone basis. Okay, so this is something to consider. The other thing is to consider is your reinstatements. When you apply for a liability policy, and this kind of works hand in hand with the limit of indemnity, when you are applying or looking around for an insurance policy, your insurer has an opportunity to cap their exposure to you. And when they cap their exposure to you, they're talking about the limit, the maximum limit that they're going to give you in the event of any loss or damage that has been alleged against you. When you're looking for insurance, you want to know whether or not that reinstatement is just +1, if it's +2, or if it's actually just an aggregated policy. What I mean by this is you can have an option to say you're in the market and you need to get $1 million. I'm not saying you should, because I think that's too low. But if you're in the market for $1 million, you want to know from the provider whether or not that $1 million is per claim. Is it, I've got 1 million to use in an annual aggregate? Do I have any extra? And when we talk about extra, we have a reinstatement of +1 or a reinstatement of +2. What that means is you have a 1 million limit, any one claim, but over the 12-month policy period, you have $2 million to use. that doesn't mean you have $2 million to do whatever it is you like with, because the limit of liability is still $1 million. Now, it gets tricky, because if you have an allegation of claim against you that's $1.2 million, your limit of liability is only $1 million.
Right.
You can't transfer the other 200,000 to the 2 million aggregate, because the one claim is for 1.2. You will then be uninsured for the $200,000, and you will also run into issues with allocation of costs, because your insurer doesn't want to pay all the legal costs and expenses to defend a $1.2 million claim. They want to pay the legal costs and expenses, which they have agreed to provide by the policy, for 1 million. So not only are you going to be 200,000 short, you will probably find that your insurer will then ask you to compensate for the defence costs that they will pay. Because typically what will happen is they will then advise you that, hey, we've got a $1.2 million claim here, but your limit is only 1 million. We will defend this claim as if we are paying our 1 million liability. If it becomes quite clear in the defence of this particular claim that the settlement is going to exceed the $1 million, they will start pulling back on their defence and then asking you to contribute.
Right.
And this
Wow.
is this is where we come to the next point. And for me, I think this, outside of legal expenses cover, is also the most important thing to look for in a technology liability policy, and that's the excess. Is the excess also known as a retention, also known as a deductible? And I'm sorry for all the aliases. The insurance companies of the world just cannot agree on calling it one universal name. A cup is a cup, but no, not in our industry. So when we talk about excesses, and I'll refer it to an excess for the purpose of this conversation, you have two types of excesses. So not only is it the level of excess, which could be 1,000, 2,500, 5,000, 10,000, it's also costs inclusive or costs exclusive. When we are talking a costs inclusive excess, this is the poor cousin of the excess levels. This is where you, as an IT contractor, have to pay the excess inclusive of all costs and expenses in the event of an allegation of claim. Now, bear in mind, I've not known any professional indemnity claims that have reached a settlement stage. On a cost-inclusive excess, first sign of allegation, the insurance company is going to say, okay, Kirsty, you have a $2,500 excess, cost-inclusive, on your policy. This is our bank account. Please deposit it now, and then we will start looking after you. The claim may never come to anything, okay? It could be withdrawn, it could be mitigated, it could be struck out. You still have to pay your excess to the insurer. Not ideal, particularly when you're found not guilty, right? From the cost exclusive perspective, it's the exact opposite. In a cost exclusive model, and there are only 2 insurers in New Zealand that provide cost exclusive excesses. Cost exclusive means that your excess is only payable if a claim is successfully brought against you. So your insurer could incur $18,000 worth of legal costs and expenses. I don't even know where 18,000 came from, it's just a number, and find that you are not legally liable to pay your client anything, which means you walk away and you don't have to submit your excess to the insurance company because it's exclusive of the costs and expenses.
That is a big difference.
It's massive, and it's really big too in agency arranged cover, which we'll touch on very shortly, because there are some absolute shockers that people don't know about when they're looking for agency arranged insurance. But going back to what to look for in the 4 pillars, is the last one is the jurisdiction. What's the jurisdiction on the policy? Are you a New Zealand domiciled? Are you working remotely? Are you going on ground into Australia? Are you going on ground into the US? There's no point getting a policy that's New Zealand only if your contract, one, has a governing law of Delaware on it, because that's
Oh
not going
God. Yeah.
or if you're having to go to Australia 60 out of 90 days because you're working with an Australian government that requires you to be there on site. The territory jurisdiction of the policy is paramount. It's telling you where your indemnity policy is going to come in to play. And if they find out that you are in Australia at the time of an allegation and you've told them that you operate from New Zealand, you are not covered. End of. So always look for the jurisdiction. Find out whether or not you can get New Zealand only, New Zealand and Australia, worldwide excluding USA and Canada. Make sure you've got your jurisdiction sorted.
Brilliant.
Is that
Now,
based on where you're actually working? Or could that be like I'm working for an Australian bank at the moment, but New Zealand version of it? Would I need Australian cover because a lot of the banking systems are physically sat in Australia, for example?
Yeah, your contract,
where I am. Yeah.
Your contract will determine the governing law. Okay, so in the back of the contract that you would be signing, it would have a governing law clause, which I was going to talk about later. But what it does is that sets your territories, your jurisdictional limits. So you know that when the proverbial hits the fan, you are going to be tried in a court of law in New South Wales, or you're going to be tried and heard in a court of law in Delaware in the US, okay? Or it's New Zealand. What you typically want to do is, if you are New Zealand domiciled, your client is in Australia, but you're on a New Zealand contract and your governing law is New Zealand, you don't need the Australian territorial or jurisdictional limits, because they have said to you that in the event that something goes wrong, we are going to apply New Zealand legislation.
That's really clear. Thank you. That's really clear.
Your contract and the governing law section, which always goes at the very end of the contract, right before you sign it, it will say this contract is governed by the laws and statute of, and whatever that says, that's your territorial and your jurisdictional limits.
Guess what I'm looking up right now.
I'll look at mine in the morning. Right, Kirsty, let's carry on. Agency arranged policies, what are the pros and cons?
Yeah, well, agency arranged insurance policies can seem like a huge, convenient opportunity. You're sitting at the desk, you're signing the contract, you look at the Schedule B and it tells you what your insurance requirements are. And then they say, oh, but by the way, we have this insurance scheme that you can be part of. Tick the box here. And for a cent rate, a dollar rate, a daily rate, an hourly rate, or a weekly rate, we will provide you with indemnity. There are some agency arranged policies that do this very well, and there are some agency arranged insurance policies that aren't that great. And I'm going to kind of touch on a little bit of both. So when you think it's convenient, that's great. Before you sign up for the policy, think about the daily cost, the weekly cost. Think about the opportunity of whether or not your contract can get extended, because that hourly cost is going to continue to burn. You might find that your contract could get extended not once but twice. You might end up paying over $900 over the course of this pay-as-you-go policy with your agency, versus taking your own insurance at a minimum level of about $335 plus GST. Doesn't make sense to pay 3 times the price. Things to look for when you're about to tick the box to say, yeah, I want the agency-related insurance. Ask the consultant who you're dealing with for a certificate of insurance or a product summary or an outline of what is being covered. And when you get that, look for these things. Who's the name on the policy? So who is the policy holder? Who is the insured? If it is showing XYZ recruitment agency, you are not covered. If it says XYZ recruitment agency and placement of IT contractors, you are not covered. The agency is covered for placing you. So their liabilities are going to be covered. Okay, this brings me to the activities, which is, you'll see it on a certificate. It could be professional duty as, or business of, or professional services. And it describes the activities of what the insurance policy is covering. If it says placement agency, employment agency, recruitment agency, placement of permanent or temporary candidates, or placement of IT contractors, you are not covered. It needs to specifically read IT contracting services. That's how you know you are going to be covered. You also know if you're going to be covered if it says IT contractors of XYZ recruitment agency. Then you know you have some cover. Outside of that, look at the limit of liability. Is the limit of liability enough, one, to satisfy the requirements that they've set out in that Schedule B? Two, is it your limit, or are you sharing it with 500 other 1,000 contractors that they've got on their books? Do you know that limit has been used? Has it already been exhausted on prior claims? What happens when an agency puts you and 6 other contractors on the same project and it implodes? They've got 6 people coming in to make a claim against that policy. Who gets the limit? Do you have to share it with them? Is it a first in, first served basis? Or has it, like I said before, already been exhausted and there is actually no limit for any of you? So check what the limit of liability is. Find out whether or not it's per contractor or if it's just any one claim. And if it's any one claim, get your own insurance. The other thing to look out for too is your excess. And I've said it before, cost inclusive, cost exclusive excesses. In the nicest possible way, agencies are using the agency arranged insurance to make a profit. Okay, they've already negotiated the insurance premium with the broker or the insurance company. So they're just basically passing the cost on to you and probably a bit more for the privilege of using their policy. But if they've got a cost inclusive excess, they will typically, to keep their costs down, take $10,000 or $20,000 standard. In the event of an allegation made against you, you are then, they're not responsible for the excess, you are. You then have to cough up that 10 or 20 grand just because it's a cost inclusive policy and the allegation was made against you. No one can potentially prove that you, as part of a team, were the one responsible for pulling the trigger, but because the agency arranged policy has a higher excess that's cost inclusive, you must give that over to them. Also bear in mind too that in those situations there might be legal counsel appointed, whether it's internal or external, but if your excess is 10 grand or 20 grand, you might find that the legal costs were actually 2. They could have even been a $300 letter to make it go away. Doesn't matter. Your cost inclusive excess is the amount that you have signed up to pay. Does that sound fair? Not from where I'm standing. In versus policy, you own it, you control it, you adjust it, the limit is yours, you know when you've exhausted it, and hopefully you've got a low excess that's cost exclusive.
Wow, there's a lot in it, isn't there?
Yeah.
What's the next bit? Yeah. We talked about governing law, we've talked about the limitation of liability clause.
Yeah.
Thank you. There is so much in it.
It is. The contracts, your agency contracts actually help you determine the level of cover that you should look for. And that's where you get your insurance clause, your indemnity clause, your limitation of liability, and your governing law. Okay. So when we talk about your insurance clause, this is usually around about maybe clause 10, 11, and 12 in a contract. The insurance clause is telling you what you must provide. So it'll come along the basis of something along the lines of the contractor must effect and maintain a professional indemnity policy of not less than $1 million and any other insurance appropriate in the provision of services of this contract. Issue number 1. the caveat of not less than. The not less than is not telling you the limit that you need to carry. It's telling you the bare minimum that you need to walk on site. So they're saying, we don't care what you have as long as it's not less than, for example, $1 million. This can backfire on you, one, in a limitation of liability, which I'll discuss in a minute, and two, whether or not you could be potentially in breach of contract because you haven't maintained the appropriate level of insurance required for you to do your job.
Right.
Then we go to the indemnity clause. And the indemnity clause is going to tell you what they're going to sue you for. Brilliant contracts. They give you the heads up. What's going to happen in the indemnity clause is it's going to read something along the lines of the contractor will indemnify and hold harmless the supplier, which is usually the agency. Now, this is where it gets long-winded, so bear with me. For all costs, all expenses, all losses, all damages, including legal costs and expenses, directly or indirectly arising from any breach of contract or negligent act, error, or omission or willful conduct of the contractor in the provision of services outlined in this agreement. When you hear the words indemnify and hold harmless in the same sentence, what your agency is telling you is that not only are you going to fully indemnify them for everything, because that's what you've said, all costs, all losses, all damages, all expenses, howsoever arising, indirectly, remember, they're also saying to you, you can't sue us if we are partially responsible for that loss. Because that's what the hold harmless clause is. You're holding them harmless. They could have given you instructions to get on site with your client. If that particular instruction caused your client financial loss and they came back for recourse, your agency is going to go, it's on you because you signed here. Why would you do that? Strike out a hold harmless. You can do it. You just have to ask for it. Okay. The next part of it is no policy is going to have unlimited liability. So when we talk about a limitation of liability, which is the next part of this, they should have something in it that says the liability of the contractor will be limited to maybe 3 or 4 or 5 times the service fee or $2 million, whichever is the greater. That is the limit of indemnity that you get any one claim on your policy. That's where you start shopping. You look at the limitation of liability clause, and that is your minimum limit. You don't look at the insurance clause and look at the one that says not less than. You look at how much they are going to sue you and where that line stops. And if they say, we will not sue you for more than $2 million, you get a $2 million policy. Because then you know at the end of the day, if they're going to sue you for 1 million, 1.8 million, you have 2 million to lose. And then if they say, we're going to take you for 2.2, you can direct them to the contract and say, thank you for playing, but no, because you have told me that my maximum liability to you is 2 million.
Good, yeah.
That sets the maximum exposure. That's the one that you should be looking for when you're applying for your insurance. Because again, you're going to come into issues with a minimum level, with breach of contract, and potentially allocation of costs if you're not looking at a limitation of liability.
So Tim's question from earlier, how do I know how much will be enough? He needs to go to his contract first.
Absolutely. So look, whoever asked the question, go back to your contract, look under, it could be a clause 10, 11 or 12, possibly 14, and it will have a limitation of liability, and it will say the words, the contractor's indemnity to the supplier will be limited to, and that's where you go, okay, that's the insurance policy thing I should buy. Now, if it says it would be limited to a maximum of $1 million and they've asked you to carry a limit of not less than $2 million, question it, because A plus B doesn't equal C. Okay. On the flip side, if there is no limitation of liability clause, ask them to write one in. Because no policy covers unlimited liability. There is always a maximum level plus a reinstatement. You can't just throw costs at somebody and expect them to pay it fully. And this brings me back to the indemnity clause as well. You can't have all costs, all expenses, all damages, indirectly or indirectly arising. Your legal liability is direct financial loss. And you can't be held responsible for anything that is caused by your client, contributory, proportionate, or otherwise, or by your agency. The other flip side of that is when you're looking at the limitation of liability and you're looking at the indemnity clauses, the insurance policies of today, no matter where you go, exclude consequential loss. So consequential loss could be anything from the extra hours the human resource department had to do to fill another ad to complete the job that you couldn't do. It could be loss of profit. It could be a number of things, right down to the extra coffee that had to be supplied for the administration team to renegotiate your contracts. They are consequential losses. They are not directly related to the loss that you caused your client. They are not covered. They are usually unquantifiable, and they almost invariably always exceed the direct financial loss. That's why they are excluded. So you need to write them out. If you have been presented with something that says all costs, all losses, all damages, all expenses, it has the words hold harmless, strike them out and say, no, thank you. You want a proportionate liability, so you want it written in that where the agency or the client has contributed to the loss, that your liability to them is going to be reduced proportionately. You can't take acceptance for someone who helped load the gun. Can you? No, you don't. Well, you don't want to. I'm telling you, you don't want to. And then again, as we talked about before, we want to look at the governing law. Check the governing law of your contract. You're working for a New Zealand client, but you're working from home. It's New Zealand jurisdiction. Make sure the governing law is New Zealand jurisdiction. I have seen contracts that have come out of a head office, whether it's New York or Australia, and they've not changed the governing law. And we've seen it after the horse has bolted. So we have had to tell people, sorry, but no, because they didn't check the governing law against their insurance policy and against their contract and get it changed. So on that note,
I love the fact that it's fear and damnation and hell and all sorts of terrible things. No, I'm joking. Insurance is important.
But it's difficult for me because I really love indemnity insurance, but I don't like delivering bad news to good people. But you kind of got to be. I'm just letting you know. Insurance isn't here to be feared. It's here to help you. It is the ambulance at the bottom of the hill. You just have to know what to look for to make sure that it's working for you and not against you, and that you don't get any nasty surprises at claim time.
Yeah, totally. And I'm going to ask the question, which is, you said there are only 2 insurers that have costs exclusive policies. Would you tell us who they are?
Delta Insurance.
Yep.
And TAI Underwriting Agency, which is a London syndicate. They are the only 2 that offer
valuable, really valuable. So Pete, you looked at your contract while Kirsty was talking. What's the good news?
No, I did, but I had a contract extension, which was just a shortened version. So I'm going to have to dig further to find my original contract. And it just said you've been extended a bit longer, kind of thing, with all the same clauses. So I'm going to have to dig a bit deeper. But that's kind of scary, isn't it? All that sort of stuff. And obviously, you just need to know that before you buy insurance, which hence coming to you is bloody hell invaluable, because it's only going to catch you out when it goes wrong. And that could just ruin your life. Scary stuff.
you do find that, you know, from my experience, I try and train contractors to bring the contracts to me first before they sign them.
Yeah.
Mm.
And then I can let them know pragmatically, okay, if you're going to sign this and you can't push back, because, you know, sometimes it's a David Goliath syndrome too. Sometimes you get agencies that say, well, everyone else has signed it. It doesn't make it right. There's always room to negotiate, especially when contracts are unfair. What agencies can sometimes do, and I'm not saying that all of them are, because there are some really good eggs out there as well, they will use the fact that they are bigger than you to write clauses into contracts that make you responsible for everything, on the premise that when the proverbial hits the fan, you will just settle it to make it go away. You will do whatever you can to make it go away because you don't want to fight the fight. So they are relying on the fact that you will not say, actually, that clause in that contract's a bit spooky, it's a bit sketchy. I might contest that in court. They will go, sure, you go for it. Have you got the legal costs and expenses? Because we could drag this out for the next decade. And that's sometimes how they play. But if you read it, you know what you're in for. You then have the choice, the free will to say, am I satisfied with this? Am I happy with this? What are the chances of this actually happening to me? Do I have the legal costs and expenses benefit that this policy is predominantly going to basically serve you for? You know, outside of any valid claims, like I said, in my decades, I've only seen one public liability claim that wasn't even IT related. But the legal costs and expenses is the coup de grace, it's the gold. It's the gold in these policies. And if you don't have that kind of money sitting in a bank account ready to defend yourself, and then spend the time and energy that you would have to do to defend yourself, a tech policy is invaluable.
Exactly. And one of the reasons we started Resourcefully and the Privileges program, which is available to anyone who is signed up with us as a contractor, you know, potentially looking for work, is so that they can get this insider knowledge and understanding, Kirsty, that you've been so generous sharing with us tonight, so that we don't have to be alone as the individual fighting a big corporation who has deeper pockets than we do. And that's just so precious. Now, Timothy's put another question up there, which says, what if I form a new company and sign the contract as a company, not as a sole trader, that was a previous discussion that we had about the advantages of that. Would the insurance policy to be purchased be different?
No, it's exactly the same. The policyholder is the policyholder. And when you look at the definition of insured, it actually says the company or entity or individual stated in the schedule, including its employees. And we all know that in the IT fraternity, you tend to set up LLCs for tax reasons, right? So the policy doesn't distinguish between whether or not it's an entity or the individual. It is covering the allegation that is made. If you are signing a contract under your LLC, you take the insurance policy in the name of the LLC, but by virtue of definition of the insured, you specifically, who is representing that company, are going to be indemnified by the same policy.
Yeah, so that's really clear. And the price is probably going to be identical.
It's exactly the same, because the way that the premiums are worked, it's on activities, it's on location, it's on turnover, and then it's on limit of indemnity. That's pretty much it. And they do know, the ones that are specialised with IT contractors, they do know that you run LLCs for tax obligations or purposes. They do know that, you know, having a husband and wife or a partner involved in the business goes hand in hand. So they cover that aspect too. So the IT contractors insurance covers up to about four or five individuals under one policy. Okay, and then you go into the small to medium tech policies. So you can get the benefit of the IT contractors insurance, which is the terms and conditions, but you are then rated on a company rate because you are bigger than 5 or 4. I'll have to check that out. I think it's 4 actually. Yeah, but no. So to answer the question, it's moot.
Yeah, great. Any further questions just before we wrap up? I will be emailing after today when we've got the recording so that you can all watch again, and we'll put this into the privileges section of Resourcefully, which is behind the registration paywall. It's free to register. So you can get it again should the time change. You know, you aren't always ready to think about insurance, are you, at exactly the right moment? So Tim's asking, is there an advantage of forming a company and using it to sign the contract? It's a different question, Timothy, and we can, if you get in touch with us through Resourcefully, we'll direct you to a slightly different meetup which answered that question from a tax and tax and accountancy point of view, which will give you a better answer, because as Kirsty's already said, it doesn't change the price of your insurance. It does affect you in other slightly different ways. So get in touch and we'll make sure we get you an answer to that, because it's a really good question. Pete, did you have any final thing? Oh, Kirsty, sorry. Where can people get in touch with you? Share your details.
Oh, that's caught me on the hop. i2ibrokers.co.nz, or you can just send me an email at kirsty@i2ibrokers.co.nz. You can get a hold of me through LinkedIn and all the other media. I don't do Insta. I'm sorry, it's not my bag. And my other cell phone numbers and all those other details are on the website as well. So i2ibrokers.co.nz predominantly, or Kirsty@i2ibrokers.
Very
and we're
good.
talking about potentially having some sort of privilege by the resourcefully registered contractors, aren't we, as well?
Yes, absolutely. So all your privileged members will get 10% off your insurance company premiums for the lifetime of the policy. So it's not just a one-off, it's annually renewable, and you will get that 10% discount on an annual renewable basis.
Fabulous. That's awesome. I just feel like this what you've just told us tonight should be spread louder and wider, and everyone should know all this sort of stuff, because that was quite incredible, really. I've learned a hell of a lot, and I've probably forgotten most of it. So I think we need to talk about having a blog or a page or something, you know, 5 things to look out for in your insurance policy, or 5 things with an agency policy, or I don't know, something just as a bit of a cheat list or something that we could put on the Resourcefully blog. But that was awesome. I'm definitely coming to you for help tomorrow. Thank you very much. And I love the fact that you said when we started, oh, I'll talk for about 20 minutes and I'm a bit nervous. That was awesome.
You're a pro.
What is the time? Wow. Okay.
Yes. We did interrupt you quite a few times with questions and clarification. So I'm not surprised you took a little longer, but you're really clear, Kirsty, and it made it easy for us to understand some frankly quite complicated concepts. So you were so clear on, for example, the difference between what an excess is called in different places, so that we know that we're talking about the same thing, and that really helps us.
Thank you. I'm glad. My job is done.
Yes, perfect. Thank you ever so much. We'll just do any last questions from anyone before we call it a night. No. So if you, like I said, register with Resourcefully, we'll put the information about the privilege on the privileges pages. We'll put something hopefully on the blog. Kirsty will grab some words or something that helps just remind us of what to look for, and that sort of stuff. So, but yes, don't know what time you're in the office tomorrow, but I'll be ringing.
I will wait for the call.
Thank you very much.
You're welcome. Have a good evening all.
Thank you.
Thank you.
Thanks.
Thanks, Timothy. Thank you.
Stop the